All right, everybody, thanks so much for joining us. As you just heard, you are in the right place for the Business Warrior Corporation Shareholder Conference call for today, September 21st, 2023. Now, this is a public update call, but not a financial quarterly call. Business Warrior's fiscal year just ended in August, so those audited financials will be completed in November. I will be joined on the call today by the CEO of Business Warrior, Rhett Doolittle. But before I turn the call over to him, let me give you the safe harbor statements, which are as follows. This call may contain forward-looking statements and information relating to, among other things, the company, its business plan and strategy, and its industry. Forward-looking statements are neither historical nor assurances of future performance. They are based on the current beliefs of assumptions made by and information currently available to the company's management regarding the future of the company's business, future plans and strategies, anticipated events and trends, the economy, and other future conditions. When used on this call, the words aim, estimate, project, believe, anticipate, intend, envision, estimate, expect, future, goal, hope, likely, may, plan, potential, seek, should, strategy, will, and similar references to future periods are intended to identify forward-looking statements, which constitute forward-looking statements. These statements reflect management's current views with respect to the future events and are subject to inherent risks, uncertainties, and changes in circumstances that are difficult to predict, many of which are outside of the company's control and could cause the company's actual results to differ materially from those contained in forward-looking statements. Investors are cautioned not to place undue reliance on these forward-looking statements, which speak only as of the date on which they are made. All subsequent written and oral forward-looking statements concerning the company, the offering, or other matters are expressly qualified in their entirety by the cautionary statements made that I'm making for you right now. The company does not undertake any obligation to revise or update these forward-looking statements to reflect events or circumstances after such date or to reflect the occurrence of unanticipated events. Now, with that being over, let me kick it over to you, Rhett Doolittle. Thank you for taking the call over, Rhett.
Thanks, Stuart, and just super excited to speak to everybody. It's been a while, been a long time coming. So investors, partners, friends, ladies and gentlemen, I'm thrilled to share some significant highlights and insights into our journey, how we got here, the progress we've been making, and the strategic moves we've made at Business Warrior Corporation. Before I do that, first, let's just dive into some numbers. We've achieved an impressive 16.5% quarter-over-quarter revenue growth to end our fiscal year in August. Now, that number is not audited yet, and our official full financial results will be shared with our annual filing due in November. But I haven't spoken in a while to the public, and we wanted to share that, share what we could immediately. So where is this growth coming from? How did we get here? It's exactly what I'm going to explore on this call. So we're going to discuss our path to profitability. We've laid out our strategy, and we're determined to reach our goals. We'll also touch upon factors that can either speed us up or slow us down on this journey. And last, and certainly not least, we'll take a closer look at our business model. How do we generate revenue, and what's the growth plan for our flagship product, PayPlan? Our journey as a company has been a series of strategic pivots and tough decisions. While we might not have followed the exact path we envisioned, years ago, we find ourselves in a much stronger and more sustainable, scalable position today. What's important to understand is that since founding the company in 2014, we've always been a software as a service or a SaaS company. We recognize the power of SaaS technology in solving growth challenges for businesses for years, right from the very beginning. Our mission has always been to help businesses make better decisions and improve profitability, all while offering cost-effective solutions. Now, in that journey with our SaaS and helping small businesses, we hit a significant milestone when we secured a sustainable contract that generated over $5 million in revenue. However, that contract was a one-time project. We really needed a recurring revenue source for long-term sustainability and to reach profitability, like I mentioned. So after that contract, market dynamics were shifting, Wall Street's expectations for profitable companies changed, And we realized that staying solely focused on small business owners really could lead to a prolonged path to profitability and risk the company's ability to succeed. So to align with evolving market trends, we needed a scalable solution that could expedite our journey to profitability. As our company, we were skilled marketers, and we still are. We've always known the importance of lead generation, sales, and profitability. To take control of our own destiny, we made a strategic move. In March of 2022, we acquired Helix House. They were a successful, profitable advertising agency. This acquisition allowed us to expand our marketing capabilities and control our lead generation. Our next challenge was finding a scalable product that could address our target market's needs effectively. We faced a choice: continue building and iterating on our existing solution, or accelerate the process through another acquisition. In June of 2022, we acquired Alchemy, believing it was a profitable company with sustainable monthly recurring SaaS revenue. However, as we integrated Alchemy, we uncovered unsettling truths about the company's financial situation and business practices. We had to invest over $350,000 after buying the company and using $2 million cash to maintain it and to address the fallout from dishonest business practices. We took legal action against the former CEO. Despite these setbacks, we recognized our strengths and expertise as marketers and financial technologists. We identified a promising opportunity to bring a combined software and marketing solution to the market, capitalizing on a market opportunity within the lending industry that exceeds $31 billion annually. Now, with our combined resources, experienced team, and the lending environment in mind, we decided to unite our efforts between Helix acquisition, Alchemy, and BZWR. Our mission now is to empower lenders, making them more profitable while efficiently distributing capital. We've experienced firsthand the challenges faced by businesses, independent contractors, and consumers in accessing reasonably priced capital. In February of this year, we launched PayPlan, a turnkey lending platform designed to solve lenders' challenges. PayPlan has seen immediate success and now stands as the centerpiece of our future endeavors at BZWR. Our journey may have taken some unexpected turns, that's for sure, but we're more determined than ever to deliver profitable solutions to our clients, investors, and the lending industry. So now I'm going to go into a little deeper dive about the company. So now as a company, with this unified vision, I want to show everybody the problems that we solve. And these are really problems that we saw firsthand, our customers, clients. And after building 50 different custom software solutions for lenders in the industry, this is the problems we continued to see before we went out and built PayPlan. Outdated, fragmented technology and manual processes were still very common with lenders. Fraud is prevalent and just expensive for lenders to stay current. The in-house technology that banks, lenders, fintechs are using just keep growing in expense and very hard to maintain. They had an inability to scale the distribution of capital, which is really just slowing down the flow of capital to consumers and businesses alike. There's just an increasing risk in loan portfolios and servicing those portfolios. Very inefficient customer acquisition. That's where the marketing comes in, and antiquated lead generation results in a reduced return on investment for lenders. Lenders are losing market share due to high costs, slow deployment of new technologies, and automation. So all of this really provided as well, the most important problem is just a real convoluted borrower experience due to this rigid loan process. So we saw this problem in the market and we decided to go fix it ourselves with this now combined strategy and this team between marketing and technology and SaaS that we had. So we built PayPlan, a turnkey end-to-end lending SaaS platform. What is it? It is everything that you need to have a complete end-to-end loan management system. That includes a loan origination system, loan management, a decision engine for underwriting, which is fully automated and customizable, and marketing services to generate qualified borrowers and making sure those borrowers are profitable. So it's more than just acquiring a new borrower for these lenders, but they got to make sure they can make money, which means they need borrowers that are going to pay back the loans so that they continue to provide more capital into the market. So we went out and we built this solution, and we built this solution in a shorter period of time than I could have ever imagined. So originally, when we acquired Alchemy, we were considering building a solution like this and probably taking 12 to 18 months. But in light of everything that happened that I mentioned before, we did it in under 6 months, which is just amazing. So why now? The technology, market conditions, and the industry adoption. So really the technology for automation and fraud protection have improved exponentially. So a lot of the existing technology solutions that we saw out there for lenders, banks, fintechs was really antiquated and expensive. So it was a real time for a shift in the market. And speaking of market, the margin pressure on lenders, as we all know, with rates increasing and everything else going on, lenders are looking at more ways to be more efficient. They still have the capital, and we know that people still want capital. They still want loans, but everything needs to be more efficient so that rates just don't continue to rise as the Fed raises rates. So really seeing an increase in lenders looking at new technology, looking at ways to decrease fraud, improve efficiency, find more qualified borrowers, so that the time is ripe in this industry. And that's why we're really seeing industry adoption from governments, banks, credit unions. Traditionally, government, banks, and credit unions have been the last to kind of adopt new technology, but that is really shifting right now. They are jumping in, and we're seeing an increase in different ways that they're either adopting new technology, trying to integrate new technology to existing solutions, or doing the complete overhaul of what they have today. The market opportunity I'm seeing, and we also saw some questions about the total addressable market opportunity in this industry, because this is one of those industries that's kind of an aha moment, and I know it was for me when we started researching becoming a lender ourselves before we made these acquisitions. Was just, holy cow, what a no-brainer. Look, when you got a mortgage on your house, what kind of manual processes did you have to go through? I know for myself, it was printing bank statements and scanning and emailing them in, or what kind of documentation the title company had to get to buy a house, or same thing with a car. What kind of phone calls did you make? And this whole process, it's so painful for the borrowers, and that flow of money took so much longer than it really needs to. So now, what are we looking at? Well, we are seeing so many industries, more than just your everyday auto loan or personal loan or business-to-business loan or mortgage. There's all kinds of financing going on, and they are all adopting new technology, automation. I mean, there are more than 4,000 financial institutions that provide mortgages in the United States. There are over 4,700 credit unions in the United States. There are over 4,000 FDIC-insured banks with over 70,000 commercial banking locations. There are 23,000 payday lenders in the United States. The rent-to-own industry with furniture and appliances is booming and growing like crazy. So this entire industry of distributing capital and using technology to make very quick decisions on borrowers and who's going to pay back their loans and how to automate those processes so that it's a good experience. It's a growing and expanding industry in the United States and globally. Where we sit within the industry, there are kind of these different pieces, like I mentioned, that ours is a complete end-to-end solution. So there's the loan origination system, which is when a borrower starts to fill out an application, that's where they're kind of originating their loan. And then that information gets passed to typically an underwriter, but this can all be automated now through a decision engine. And then there's the loan manager managing that loan. And then before this, and really throughout the whole entire layer, is marketing services. Marketing services, how to find new qualified borrowers, how to then shuffle the qualified borrowers through the process to make sure that they choose the right loan with the right provider. And then marketing services to make sure that those borrowers pay back their loans as well. So having that marketing layer is definitely a unique selling proposition for us, and a big reason why we have the Helix marketing agency in the business model here. So our solution covers it all, and I don't know of another solution out there that has it all, especially this marketing layer that really drives costs down and gives lenders a better return on their investment. So I've also gotten a lot of questions, via Twitter and via email on our business model. How does the whole thing work? How can we make sure that it's our business model is scalable? What happens? How do we generate new leads? So this slide covers it all. So what's our business model? We generate leads through advertising, anything from Google pay-per-click to social media to events, cold email lists, partner distribution lists. they come in, they see, different either ads or offers. They come into our digital kind of platform, and then we schedule demos. We give them a quick demo. Typically after a demo, people get exactly what we're offering, and they know whether it's a fit very quickly in one demo call. And then we go through requirements. What are the requirements of this lender? What type of lender? Is it a business loan? Is it a personal loan? Is it, what kind of loan is it? What's kind of like that lender's, unique kind of selling proposition? What's unique about them? What kind of data do we need to bring in, if any? And then we give them a quote, they sign, and then we move to onboarding. So I also got a question about, kind of what are our bottlenecks? So, we can increase sales and advertising, but if we can't onboard more, then that's definitely a bottleneck. So, that's a good and bad problem we have right now. We are actually reaching capacity on our onboarding. So, we're raising more capital to increase capacity in our business model to be able to on more new sales faster and increase revenue faster. That's also a way we can speed up our path to profitability, is to be able to onboard new sales faster by increasing capacity. So our different kind of flavors in our SaaS lending solution are, range from starter client to a very large enterprise client. If a starter kind of client that doesn't have much customization needed, we can onboard them in under 60 days. Really, we're aiming for 45 days. We don't see a lot of those because pretty much everybody wants a little bit of customization. So, our customization on large projects, can go as long as 6 months, but really the average is, I would say, around 3 months. So once we onboard them, they have a complete end-to-end solution on loaning money, lending, and then collecting on that money. We train the client, and then live traffic kicks in. They can either get the entire end-to-end solution, or they can kind of, like I said, a lot of these banks and credit unions, they may have an existing loan origination system, and because there's so much traffic on there already, they don't want to move that. So that's fine. They can just use our decision engine and loan management system, or vice versa. Somebody may just really like our loan origination decision engine and not use our loan management system. So even though it's a complete end-to-end solution, we can module and customize it for what they have today to make it work. And a lot of what we're seeing is people may come to us and just need a decision engine. And once they see the entire solution, they go, holy cow, man, our existing solution is just ancient compared to what you guys have. And they've actually, we've had a couple clients shift and say, well, you know what, we're going to look at, overhauling our complete solution and making a shift completely over to you guys. And we've won some of those deals, which is really great. So now here's the real juice, what everybody wants to know. What's the economics behind PayPlan and our business model? So the average revenue we're seeing per customer kind of in 3 tiers, like I said, the enterprise, the middle, and then kind of custom. And it starts, there's the SaaS piece, which is the monthly software fee behind the software as a service. And then as a client gets onboarded and live and they start processing loans through us, then there's lots of little partner fees, referral fees, and really what we call, transaction volume behind the traffic that goes into our solution. So profitability over time goes really up. In the beginning, we have to put a lot of time, money, and resources in onboarding these clients, customizing it, training their team. But then as they start using the system, it needs less resources, and our profitability, because there's transactions volume and loan volume and things kick in, our revenue goes up and the profitability behind that revenue goes up. So it gets a lot of fun. And then there's professional services. So that's either our marketing services. People, want us to do end-to-end marketing for them to generate more loans for them. We're still seeing in this industry a lot of business and personal loans are generated via direct mail, which is crazy. So, we're always going in there either to help support their direct mail efforts or get them into 2023 times and move into a digital marketing strategy. So that's a sample of our professional services. Our professional services also include our, complete custom software development group, which is Alchemy. So we still have that support as well. So that's bundled. So that's the 3 main areas going forward: is SaaS revenue, transaction fees behind the loan volume, and then professional services layer on top. And then, so how's it going? That's the other question that I got. How's it going with PayPlan? What's the secret sauce here? Why is your solution better? Are you guys winning versus your competition? I can say, yes, we're winning at a great rate right now. We're able to generate leads consistently, predictably, which is very, very important. Over the last 6 months, we've gotten, I would say, A+ reviews on our product, which is great. Leads have been increasing. Our lead cost has been decreasing. Our acquisition cost has been decreasing, which means that our sales closing rate has been improving, which is bringing that acquisition cost down. And now we're working on our onboarding time and the profitability. So as I mentioned in the very beginning, yes, sales revenue way up for the quarter. The majority of that increase has come from PayPlan. So people ask me about, the other divisions and the growth. We kind of expect slight growth from the Helix division, especially as we're rolling out more lender marketing solutions. And then we expect flat to slowly decreasing revenue in the Alchemy division, but it's the smallest piece anyways. That's just the kind of legacy revenue from the acquisition that we made last year. And then PayPlan is all where the growth is. So we're generating leads, means our messaging and our product is working. We have a product fit, the market is reacting. So that's why our lead cost is going down. As we become a bigger name in the industry, that's going to continue to go down. We're winning at a higher rate, which is driving the acquisition cost down. And it's really all behind the technology. It's our competitive advantage. The way we built this platform behind a multi-tenant architecture, the business rules, using data, making it a flexible platform that's very customizable. The cost is much lower than our competition. We're able to onboard clients faster, and everything's there right now with that's telling us that we really built an amazing product that has a great product fit. So lastly, here's just a quick summary again of some past financials as I kind of wrap this up here. Last quarter, the third quarter that ended May 31st, we did have 3.8% revenue growth. We have been cutting expenses wherever possible for that faster path to profitability. And then in the fourth quarter, like I mentioned, that growth rate went up to 16.5% quarter-over-quarter revenue growth. Both those numbers are unaudited, as we'll be going through our annual audit right now for the full fiscal year ending in August. And we'll provide an update in November behind that. And so what's our focus now? Our focus is this unified strategy. It's this lender SaaS solution, sales and marketing, grow sales and marketing, increase capacity. So what do we need to do to increase capacity? We need to continue to raise capital until we're profitable. We increase capacity, increase sales, and we can shorten that path to profitability. And as always, we're going to continually improve the product and roll out new features that's going to help us win at a faster rate. Here's some quotes from the existing and new clients that are really just seeing some great results right out of the gate. We only launched this product in February of this year. So the fact that we're winning at the rate that we are, we're seeing the success and the revenue growth. It's really, really exciting right now. So here's the executive team up here. And these guys are doing a great job. And Stuart, I am ready for some questions.
All right, great. Well, I want to thank everybody for submitting their questions throughout the past week and on social media. So we've put them all together. Some of them were duplicates. Some of them were very similar to other ones. So we've condensed it down to about 6 questions here. First one, what is the expected break-even date, Rhett?
Yeah, so our break-even date is about 12 to 18 months. So that's, obviously that's a 6-month kind of variability there. And that's really, we need to continue to raise capital. So, our current investors and new investor groups that we're bringing in, we're looking at different structures to bring in more capital. And if we can bring in more capital and increase capacity faster, then we'll be closer to the 12 months or even shorter than that. And, if we kind of follow the current path that we're on, without much additional capital, then, be closer to the 18 months.
Okay, next question, Rhett. Can you address the recent issuance of the 10 million shares and then the 38 million shares as well?
Yes, absolutely. So the 10 million shares were to our employees. Those were either employment contracts, incentives, or just people that hit incentives for being at the company for a vesting period. So we've been cutting expenses and, quite frankly, underpaying a lot of our people, but we still incentivize them through stock and the success of the company. Now, the 38 million shares was the last of the payout for the acquisition of Helix House Agency. So that has actually been on the balance sheet as a contingent liability up until now, and we did settle on a number of shares, so that will move from the balance sheet from a contingent liability to the issuance of these 38 million shares. So that's been on there. It's just a shift, and we've known about that since the acquisition in March of 2022.
All right, next question. How is the growth rate distributed over the different business segments?
Yeah, I mentioned this, and I'll be able to go into more financial details once the audited financials are out, but our growth rate is the majority is coming from PayPlan in this last quarter. We're seeing kind of about flat revenue growth in Alchemy and slight revenue growth from Helix. But the current revenue, the majority of it is coming from PayPlan. That's the focus of the company, and that's where we expect the majority of the revenue growth going forward.
All right. You will need financing. That's a statement, not a question. How do you intend to acquire financing since financing conditions are hard in the U.S.?
Yes, and we've had a business model that has required financing for quite some time, and like I mentioned earlier in the call, market conditions definitely shifted in Wall Street. So, we're always looking at that, and that's why we made a shift. Instead of operating 3 different business models, we really unified a strategy so that we can get to profitability a lot faster. We have our existing investor groups that are cooperating with us and providing capital, and we are very transparent with them on, just like with you guys, when we make this information public, that they know, like, hey, this is the plan, this is how much capital we need, and we're continuing to show progress and the really positive points on our key performance indicators that show us that we're headed in the right direction and we're going to hit profitability. So when we do that, it's a lot easier to raise capital from, either existing investor groups or new ones. So that is a constant focus of mine personally, to make sure that we have the right structure in place to raise capital to get us to where we need to be, and which is profitable and self-sustaining for the long term.
All right. Do you face intense competition, and how will you address this to keep the company growing?
I think in almost any business, unless you're a complete unicorn, you're always going to get intense competition. So yes, there's competition out there. Right now, I can tell you that we run into a competitor on almost every deal, and we're winning at a really great rate, which is a testament to the product that we've built, the team that we have, and the processes that we have. And I think the clients are happy with what they're seeing from our team and our solution. So I don't know, your definition of an intense competition, but we're seeing competition. To me, it's normal, and we're prepared for it, and we're winning.
All right, very good. This is my final question for you then. Do you guys have difficulties in attracting and or retaining qualified employees?
No, we do not have that problem. We have a great team. We have a great mix of developers in the United States and internationally, and we've been able to, attract and acquire and retain great developers internationally and in the United States, and from our operations in the United States as well. We have a great management team. I feel like we have a great culture, and we haven't had a tough time growing employees when we need to.
Well, Rhett, as you heard, that was my final question for you today. Any closing thoughts or comments before we wrap up this call?
No, I think, I've been a business owner, entrepreneur for almost 20 years now, and these are the moments where it's the most exciting of all time, because when your lead costs are going down, that means you're attracting, enough leads to, build the business. You're closing them at a great rate, which means revenue's going, profitability is improving. All those major metrics are clicking right now. So it's just super exciting, and to have a team that sees that and that is just operating really well. These are those moments, as a business owner, it's like the day before Christmas. If you celebrate Christmas, it's like Christmas Eve. You're excited, but you're seeing all the hard work pay off, and all the results are kind of there. So now it's time to go take advantage and crank away and keep doing what we're doing. So I appreciate it, and I appreciate the time today, and can't wait to keep the public informed of what we've got going on.
Very good. Well, listeners, you can stay in touch with the company via social channels and, of course, through their website, businesswarrior.com. That concludes our call today. I'd like to thank Rhett Doolittle, CEO of the company, as well as all of you shareholders for sending in your questions. Please stay tuned and stay in touch on that press wire using the ticker symbol BZWR for more announcements from the company. Thank you.